Hey guys, Matt here. So in this video, I want to talk about AT&T's recent earnings and what I think about them. Now, this is sort of a part two. You can watch part one up here. But if you just want to get my overall opinion and leave, I respect your time. I don't think the earnings were a 10 out of 10 or an A plus, whatever. But I do think the earnings were very solid, and I would consider myself satisfied. If you want to know more, then keep on watching. Okay, so let's talk AT&T's earnings. So I'm recording this on April the 22nd. AT&T released earnings yesterday, the 21st, and the reaction as a result of those earnings were pretty positive. It was a good earnings. Like I said in the beginning, it was a solid earnings, and I'm very satisfied. Now today there was a bit of a drop off, and AT&T gave back a lot of the gains. But given today, I think you can attribute a lot of the drop off of today due to the fact that, the market did not have a good day at all. And not only that, Verizon had earnings today, and they were not stellar. Now, I didn't get a chance to digest it. I will later today or sometime this weekend, but yeah, they were not good. And if we scroll down here, we go here, they beat on earnings, which is fantastic, but they lost subscribers, which is the opposite of what AT&T did. Now, in my opinion, this in combination with the massive drop-off of today, people are like-minded, Now, I don't know if this was the loss of subscribers, if this is a problem for Verizon, because I haven't read the earnings yet, or if this is a problem with the industry. And I think some investors might be thinking it's a problem with the industry, of which AT&T participates, and then they might have, they want to have sold off a bit of AT&T. But I don't think that's a long-term thing at all. I'm not really worried about that. So let's get the obvious out of the way. Yes, as far as the top line and the bottom line, it was a bit of a drop-off from last year, but that's to be expected. I think everyone who's been in AT&T knows that, and that was largely because, over the past year or so, AT&T has been selling off huge portions of its business, and recently AT&T finally got rid of Warner Media. So yes, a drop-off from now versus last year, yeah, that's to be expected. And if you recall during my last video, the only thing I wanted AT&T to do was to meet analyst expectations for both EPS and revenue. And if we take a look, here, you see AT&T did that handily. They beat EPS by 12%, and they beat revenue by 29%. It was a really solid quarter for AT&T. I can't be mad at most of the things that came out of it, both in the report and on the call. Now, in my last video, one of the things I did say I cared about was their communications and how that's performing, because now that they're done with Warner Media, now that they're done with, Latin America, except for Mexico, Vrio's gone. Communications is what they are going to be known for this moment on, exclusively, almost exclusively. So this right here is what we need to be watching for as far as how AT&T is doing. And the communications, the top line, yeah, it's showing pretty good versus this quarter last year. We're talking 28.8 million versus 28.1 million, looking pretty good. Mobility is up. Business is suffering a bit. Consumer wireline is up away. So aside from the business, and keep in mind the business is still pretty good, but so far so good. If we look at adjusted EBITDA, that right there is, we are seeing some drop offs here versus this quarter last year. It's looking pretty good versus last quarter, but versus last year, yeah, we're seeing some headwinds here. And if we go over here, you can see that a lot of that is due to their operating expenses. And now a lot of that is explained, I think well explained, because they are toning down a lot of their old services, such as the 3G network shutdown costs. That costs a lot of money. And part of my skill set, my first job is in networking, so this is something I'm familiar with. So yeah, there's a lot of money involved in shutting down this stuff, a lot of equipment to be retired. Yeah, I can understand that, but the higher bad debt. Now, spoiler alert, the debt still is a problem with AT&T. We'll get into that later, but the debt is a problem. Now, there is some really good news to be had here. And this is their metrics as far as their mobility. Now, unlike Verizon, AT&T is adding subscribers. So their net add is 5.5 million, which is fantastic versus last quarter, and even more fantastic versus this quarter last year. So they're looking good on all fronts as far as total subscribers. That's looking really, really good. Like, yeah, I cannot be mad at these numbers. And they got churn down to 0.79%. So yeah, they're keeping most of their customers. Like, this right here is probably my favorite part of the earnings report. So this right here, like, this leads me to believe that operating expenses aside and all that stuff, like, that stuff that should hopefully go away over time, as the money that AT&T is getting from divesting Warner Media and all that stuff, and their efforts and the growing. Like, this right here is their base for getting better and better over the next couple of quarters. Now, assuming the economy plays ball, and assuming AT&T plays ball and doesn't drop the ball, like, we should be looking really, really good over the next several quarters. And moving on to John Stankey's his performance during the call, like, one of the things I was looking for was how he sounded. He sounded very confident. Now, that could have been an act. He could be fooling, but he convinced me. Like, I believed at the end of this call that he was very confident in the direction of his business, that it was well handled. And I'm starting to really believe that, as much as I disagreed in the beginning, maybe getting rid of Warner Media is the right move, especially if they take the money gained and they put it in the right places. So before I get to my final thoughts, let's go over the balance sheet. And this is where we bring up the debt. Anyone who's been at AT&T knows that their debt is a problem. It's been a huge problem. Now, is it an immediate problem? No, it's not a problem immediately, because, I mean, as long as AT&T continues performing as well as they have been, as long as they continue bringing in cash flow, no, the debt is not a problem. The debt is not a problem at all. It doesn't become a problem until the first quarter AT&T experiences, where maybe the finances aren't all there. And then the debt starts becoming more and more of an issue. And that's why that's what makes it a problem. And this is what makes owning the stock kind of a pain in the ass, because I remember when I first got in AT&T about a year or so ago, that was their goal, is to pay down the debt. Pay down the debt. That was it. And then they just kept taking out more debt and more debt and more debt. And I could understand most of the reasons why they did it. Like, one of them was for the C-band stuff, and this right here was probably to finance the vestiges from Warner Media, and probably some of the 3G stuff. Like, a lot of the stuff I can understand. But from here on out, like, now that all that's kind of getting behind them, like, they really need to get their act together. They really need to start doing that. Now, if I go over here, now one of their, this is from their presentation slide, one of their goals is to reduce their debt. Now, they say this every time, to target net debt to adjusted EBITDA of 2.5 range by the end of 2023. Now, I did some calculations. Now, correct me if I'm wrong. Last year, as of last quarter's earnings, to close out 2021, their net debt to EBITDA, I think it was just under 3, which was fine, but now they have a lot more debt. So I'm interested in seeing what happens at the end of 2022. So we'll see what happens. Like, they did receive $40.4 billion in cash that I'm assuming is going to go towards debt, and Warner Media did take off a portion of that debt. So we'll see what happens over the next couple of quarters. Now, to close things out, I want to talk about one of the Q&As, one of the questions that really hit home with me. One of the questions was, I forget who asked it, but they asked whether AT&T sees themselves going forward as a dividend yield or a dividend grower kind of stock. And the answer was non-committal, at face value. But I think it was John who answered. And he talked about he was going to go back to the board and they were going to determine what they were going to do with their net income. Whether it makes sense to allocate it towards more dividends, towards increasing the dividends, or whether it makes sense for them to put it back into the company. And now, as someone who bought AT&T originally for the dividends and for them as a value stock, that kind of excites me. As excited as I am to see a nice dividend yield, it's 6.0%, I think, last I checked, which is pretty good. As much as I would like to see that dividend yield grow, if them putting the money back into the company is going to raise their performance and thus raise their share price over time, I'm all for that, if it works. So it leads me to believe that AT&T is trying to get into somewhat of a growth company. Now, is that going to happen? I don't know. I don't think they're going to 10x or 5x. We're not talking about that. But we are seeing a company, I think, that's really putting a lot of effort into trying to grow their share price. And if that's their goal, then I'm all for it. But in my opinion, yeah, there is a lot of growth to be had as AT&T expands its 5G and its wireless into more of the rural communities and into more businesses. So I am pretty excited to see where this company goes in the future. But I mean, we're gonna have to it's more of a I see this earnings as more of a solid a starting point as to what comes next. Now, we'll see what happens over the next few quarters, but so far, yeah, I'm pretty satisfied. But anyways, take care, have a great day, and eat your vegetables.